it's a crazy time, man. It truly is. And it's not about becoming wealthy buying silver. It's about exiting this chaos. And there isn't a better place on the planet to do it than silver.
Andy Schectman discusses the current state of the market, with a focus on silver and gold. He notes the recent rally in the golden and silver markets and the excitement around the silver squeeze. He also highlights the importance of the news media, such as Chris, for educating investors and preparing them for such events.
This is the closest I've seen to silver squeeze my whole career. They say that we're motivated in two ways in this world. We're motivated by greed, and that's been really the mantra of the past, 2 decades, at least the last decade, where low interest rates and easy money have stimulated the economies and created an amazing environment for traditional investments. But everything good comes to an end. And I think that is what we are seeing right now. Just as bullish as easy money and lower interest rates were for the economy and the markets, it will be equally and maybe even exponentially more bearish in an environment where credit is being reined in and rates are rising. And you can see this right now, because the reason it might be exponentially more is these banks have loaded up on assets at super low interest rates over the last several years.
Andy explains that we are motivated in two ways, by greed and fear. While low interest rates and easy money have stimulated the economy and created a favorable investment environment, all good things must end. As credit reined in and rates raise, the markets will shift significantly, which may be even more bearish than the previous bullish market.
When you see a rush of depositors out the door, like we saw here with the Silicon Valley Bank, they have to sell their assets. And those bonds they were buying at 2 and 3% are now being sold at 4 and 5%. They've lost over half their value. They're getting eviscerated. And like we saw last night, in one night, one of these banks can go upside down. And what the Fed has done by saying we'll backstop all this shit is ridiculous. They're signaling hyperinflation. And I think people out there are now concerned, and fear is taking over where greed left off.
Andy notes that the recent rush of depositors out the door has resulted in banks having to sell their assets, which are now worth much less than what they paid for them. This, combined with the uncertain and undercapitalized banking system, has caused people to grasp for whatever silver and gold they can buy, fearing hyperinflation and uncertainty.
I've never seen anything quite like it, truly. Whereas Silver Squeeze was a whole bunch of new people jumping in on the silver ride, what you're seeing right now is people grasping for whatever silver and gold that they can buy, because they don't want to leave their money in a banking system that is woefully undercapitalized, hugely overleveraged, and completely and totally uncertain as to where we're going. Chris, this is the craziest thing I've ever seen.
They are surprised at how quickly the recent events unfolded and how the falling share prices have made people more concerned. He discusses the numerous calls he has received from people wanting to withdraw their money from the banks, which is an unusual occurrence. The fear and anxiety felt by investors are palpable.
Fortunately, Joe Biden did say that everything is okay and we're on sound footing, so there is that. But yeah, I think it's, at least to me, and I think to a lot of other people, surprising just at how quickly the thing unfolded here, and just a matter of days, losing a couple $100 in the share price as well. So I think that perhaps rightfully has people a bit concerned. I hear all of the bullion dealers were getting a lot of calls today and even yesterday, and I'm curious what people were actually saying as they called in.
I want my money out of the bank. How quickly can this happen? We're talking millions and millions of dollars, where people are calling in and leaving messages. I want to spend $2 million. I want to spend. That's not what normally happens. And fear, anxiety, total anxiety, you can feel it. It's palpable.
Andy highlights the difference between the silver squeeze and the current situation, noting that the former was chaotic and frenzied, with people wanting to capitalize on it. In contrast, the current situation is driven by fear, with people wanting to protect their money from an uncertain and undercapitalized banking system.
Whereas during Silver Squeeze, it was about, I need to capitalize on this. It's going to go to the moon, just like AMC and GameStop. We're going to make a ton of money. It was different. It was chaotic. It was frenzied. And it was a lot of people, most of which were decent size orders. Some were really small. Some were okay. This is people saying, I want to empty my bank account. I do not want my money at all in the banking system. I was taking orders till 1:30 in the morning last night. On Sunday night, I'm getting calls from the West Coast and people saying, oh, I didn't think you'd answer. And I did. I was there doing paperwork and talking to people. And I've waited a career for an environment just like this. And I've been talking about this for the last 3 months, ever since the FDIC meeting in November. People are terrified, Chris, and honest to God, they are. And rightfully, you know what? I am too. I'm concerned. And when you listen to a cumulative amount of anxiety and fear over the last 24 hours that I have, it starts to drip off of you. And I feel this. I feel like I'm wearing everyone's anxiety. And it's unlike anything I've ever experienced.
Andy expresses their concern and anxiety about the situation. He talks about how the cumulative amount of fear and anxiety they have been experiencing over the last week is unlike anything they have ever experienced before.
One of the things that I want to say is that for me, gold and silver have been wealth. My whole career, my whole adult life, that was the way I learned this business. Gold and silver are wealth, have been for 5,000 years. Kings, queens, emperors, pharaohs, through every pandemic, through 2 world wars, through German hyperinflation, through the Great Depression, it's been wealth. And that's what it means to me. And I rue the fact that I have to talk about this in the light of, you better do it to save your ass. And that's the way people are reacting right now. They feel that way. And I understand it. You know what? I've done the same thing. I've been buying it myself because I don't want my money in the banking system either. And I don't want all this money in dollars when we are being told that, oh, don't worry, everything is okay. Look the other way. What are the banks going to do? Are they going to save the dollar or are they going to save the banks? And I don't know. I think this is a situation where when the government tells us that everything is okay and don't worry, we're going to take care of it, that's when I think we should all be the most concerned. And they've been wrong, right? They've been wrong since day one. And they told them, when was the last time that the Fed and the Treasury and the FDIC met on a Sunday evening, followed up by the president saying, don't worry, as you said. Look, they've lost all credibility. There was going to be no inflation, and then it was transitory, and then we're going to stop inflation, and then inflation reemerged. It's all crap. And they're scared. And the time to be scared is when they tell us, don't worry, we've got everything covered. I just think it's going to get a lot bigger than what's happened over the last few days. I truly do believe that.
Yeah, especially on Tuesday, you have the inflation report coming out, which by the time people are listening to this will have been released, and certainly is symptomatic of that dynamic that the Fed's been backed into, I don't know, maybe for 15 years now, where I don't know that there is a simple answer that solves all of this, because you either secure the depositors like they did over the weekend, or you let the banks fail. And we saw once again that they went for the securing the depositors approach, which again, I think I can understand people being frustrated with either decision, because the damage, I think, was done a long time ago. And now it's at that point where we're facing the consequences of it.
And Chris, look, the FDIC can't handle this. They told us this in their meeting in November, but their insurance fund only has 0.03% of total deposits across the whole U.S. banking system.